Hey guys, I've been around trading for a long time now. I was a market maker for Fidelity back in the day. I consulted for the New York Stock Exchange. I've consulted for various financial institutions, including FDIC, SEC, and I've also done a lot of courses on trading that I've done pretty well. Those include both technical analysis and options. And today, what I thought I would do is to show you sort of what I see on a daily intraday basis as I'm looking at the market and specifically just looking at the cues here in this trading. In my screen here, I have this Fibonacci retracement because we're still in a retracement from this downtrend. So I just basically have that on my screen so I know where the levels are. This 488 level in particular, as we've retraced to that level for the past week, we've been sort of holding around, trading around that level. It's acting kind of like a magnet for the market, and we're having trouble moving away from that level. This area between the 50% retracement and the 0.618 is an area where people, institutions, look to short on a retracement if you believe, and a lot of people still do, that we're heading into recession and heading lower. So like I said, I like to have that up on my chart. I'm going to drop to a 2-minute. So this morning we opened, traded flat for a little bit. If you had an orb trade on, it did really well. We traded in this 15-minute range and then broke through that. We retraced a little bit, but didn't get up to where your stop would have been if you were doing an orb trade. And then the cues just fell apart, right? So if you had an orb trade on this morning, that would have been a really good trade. This move lower, as you can see, we broke through. And again, I'm watching closely that 488 line from the Fibonacci retracement of the overall large market decline. So I had that level in mind and I went back as we were falling and kind of look where we got to yesterday and what the lows look like yesterday down here around 484. There wasn't really news on this move. So I didn't think we would quite get down to that 484 level. It just didn't seem that the selling was that intense from my reading. So when we got down here, we put in this, and this is basically a tweezer bottom. It's not exactly a tweezer because it's not the exact same price, but that's fine. It's close enough to a tweezer bottom where you have two candles that have long wicks on them and get down to that same price. This is what's called a rickshaw. It just means indecision in the market, right? When you get a candle that has a small body and you have wicks on both, I'm going to make it bigger, and you have wicks on both sides, it's called a rickshaw. One of the things that I got to do early in my career 30 years ago was take classes from Steve Nissan. I believe I'm saying it correctly. And he is one of the godfathers of candlestick charting. I still use his book. I pulled this out to, so you guys can see it. This Japanese candlestick charting techniques was one of the first technical analysis books that I ever read. And I highly recommend it. It's really good. But this is a tweezer bottom. So I'm going to be referring to some Japanese candlestick patterns that I see. We had the tweezer bottom. I went long here. We had a retracement. And basically, if you get the bottom, like if this actually is the bottom, and obviously when you draw these lines in, you don't know that it's the bottom, but if you have a technical indicator that looks like it's the bottom, and so you want to kind of call the bottom here, you're going to get a 25% retracement of the move a large percentage of the time, right? So 90% of the time, you're going to get a bounce, basically. That's 25% of that move. And we got that like relatively quickly. Then we retraced to the 38% mark and then retraced to the 50% mark. 50% is where you want to look to short if the market's still weak. So I use a lot of kind of 50%, quarters and thirds, when I'm looking at moves and counter moves. So a 50% retracement is a place to look for a short. We also got back to VWAP, and you can see we pulled in fairly rapidly on, again, the 2-minute chart, came back and touched that 50% level again. So now you have a double top, right? You've got a double top right at the 50%, a really good place to short. I had a short in here. We come back, touch that 23% mark from the retracement move. This is getting, it's 11:30, it's around lunchtime, and we sort of go flat on the day. Not a lot of action as we move forward throughout the day. And you can pull these over, obviously. Sometimes I do, sometimes I don't. This candle, someone asked me about it in my Discord, was an algo triggered on something. We had this really sharp spike lower, but basically we erased it, a couple of bars later, and it was, done. So you could ignore that spike. We looked like we were basing, right? We put in a bottom, a double bottom. This kind of is a triple bottom. Again, it's an algorithm fired off a cell program. So I wouldn't, give it too much attention, but you can see that the moving averages, the 20, the 13, and the 8 converged here, right? So when the moving averages, if your stock is getting ready to move, the moving averages are going to be together like this, and then they'll fire apart, right? And so the moving averages converge, you get what I call compression. So you had compression in the market, looked like we were basing, we put in this bottom. So the next most likely move is higher. Again, not going to work every time, but you get a power move here off the 20. And one of the things I look for is where it starts. It starts at the 20, this move, and you clear immediate resistance to the left, right? So that is an entry for a power bar move. You get one push and you get a second push. I'm generally looking for 3 pushes. There's lots of 3s in the stock market, right? So I'm looking for sort of 3 pushes higher. And the issue is that on the second push, you're getting really close. You're about 40 cents off from this top, this double top. So that's your resistance. So the market was, a little sluggish, not a ton going on, not a lot of power, not a lot of, desire to move up rapidly. So on this second push, I would be, wary at that point. So if you took the long, I would look to be selling into the second push. The next thing that came up was another candlestick pattern, and this is a short I took. It's basically called falling 3. You don't have to remember the name of the pattern, but when you get a red candle, a large red candle, and then you get 3 candlesticks, and in this case, there's something called the falling 3, which is what we're looking at. There's also something called the rising 3. So a green candlestick, and then 3 red candlesticks, and then a solid green candlestick higher. That's the rising 3. This is the falling 3. And again, this is something that's also covered in the Steve Nissan book. But large red candle, 3 green candles, smaller within the red candle, basically, and then another red candle. This was a short point here, and this is another trade that I took, a short. We had a nice fall off in the market at that point. And note also, it was sort of a W top. It's not really a head and shoulders, but it looks kind of like a head and shoulders top on a short-term chart. It was also at VWAP. I like to stack my technical indicators. So I want to see multiple, as many as I can, indicators going in my direction. So that sort of rolling top said that we probably would go short, or probably should go short, as we would probably fall off. When we fell off and then rebounded here, what I was looking for on this big candle was a 50% retracement. That 50% number, again, I didn't like draw in Fibonacci lines, but I was looking for a 50% move to this level. And I actually took a short here. I just covered it out, as we fell back down. So that was another trade that I took. We were under the 20 at that point. Something else that I was then looking for was a retracement to the 20 and a possible fall off and taking out this support, but we didn't get that. So I did not take a second short there. Again, I just wanted to share sort of intraday. It's sort of a, not a ton going on kind of day. We're really basically, after we had this big sell down, we'd been flat all day. But if you're actively trading, there are still setups, right? There's still setups to trade. This double top was a really nice setup, and it was at the 50% retracement. This power bar move was a nice setup. This short on the falling 3 was a nice setup. So even in a market that's not moving a ton, especially if you're trading Q futures or you're doing 0 DTEs, there were quite a few setups to trade today that worked really well. So like I said, I just wanted to share some of those, the things that I was watching today, some of the things that did develop and a couple of things that didn't. So I hope that little walkthrough is helpful to you and your trading. If you don't follow Steve Nissan or haven't read his book, he has a couple more after this one, The Japanese Candlestick Charting Techniques. Again, I highly recommend it. It's an old book for an old trader. So again, hope this was helpful. If it was, please hit like, subscribe. I'll do more videos like this. Thanks.